Bless Squad, what's going on with y'all, man? It's your boy, Blessed Applesauce to the Bless Y'all with another video. And here today, we are here to talk about what happened in the market, what happened today, because it was an absolute bloodbath. It was a bloodbath in the market. You can't really see from this chart too bad. As you can see, this is the S&P 500 daily chart. You can't see from the chart too bad because we did have a nice green recovery on the day, but in the morning, it was especially bad. And as you can see over the past couple of days, it's just been really shaky. Everything's been really down. We're going to take a look at a couple of stocks and I'm explaining to y'all what happened today, why the market was down so bad, and what you should do with your money, with your account, so we can grow our trading account. So without further ado, let's look at this, the S&P 500 overall chart. We're going to go to the 1 minute chart. If no one is familiar with this charting platform I have, this is Thinkorswim. Highly recommend their charting. Really great, really clean, really easy to read, stuff like that. But as you can see, this is the overnight picture of what happened. This little section right here is the overnight picture. Let's just highlight this, just this, for example. This is what happened overnight. It was really bad. Everything was dropping like crazy. As soon as the market opened, it was just an absolute bloodbath, and it finally caught a bid at 380 around this level, and then started taking off. But what happened was interest rates began to rise, and if you're not familiar with last year, March 2020, last year, I'm quite sure everybody knows we had COVID-19, and with the COVID-19, everything was shut down, everything was going crazy. And what the Fed did, they dropped interest rates to zero. They dropped them to 0%. And what that did is that made money very cheap to borrow. But that comes with a consequence. There's a reason for this. And the reason why they dropped it so low is because they wanted to push stock prices up. They wanted to allow companies to borrow money at very low and cheap prices. But with this, if you have a savings account, you've probably noticed at your bank, you're not making any interest on your money anymore. So with them putting interest rates so low, you're not making any money. And that's the same thing that's happening in savings account, and that's what's happening in bonds. So we're going to take a look at bonds real quick. I just want to show y'all quickly what the bond yields are looking like as of today. So here are some of the bond yields. So as you can see here, these are the bond yields. They're incredibly low, incredibly cheap. This is what you're going to be getting on your money. 0.06, 0.07, 0.79. These are like years. The 5 year, the 1 year is now pushing about over 1%. The 20 year is 1.6, and the 30 year is 1.84. And the reason why this is a problem is because the same way people are not interested in saving money in a bank, because they're not making any interest off their money, people are not interested in saving money in a bond because they're not making any money. Just imagine somebody gave you a 1% return over 30 years on your money. That's horrible. That's terrible. And nobody's interested in doing that anymore. So what's going on? People are selling bonds. People are selling bonds. So when people are selling bonds, it pushes the interest rate up. And that's what happened overnight last night. Interest rates started going up because people were selling bonds, putting selling pressure on the bonds. And what the Fed has been doing to counteract this, the reason why we have so much stimulus going on today, people print the Fed printing money and the Congress talking about, okay, let's put another stimulus package together, is because they're trying to suppress the bond rate. So whenever somebody sells a bond, the average Joe sells a bond, the Fed is coming in to buy that bond so they can keep the prices down. They're trying to keep a lid on the prices. They're trying to, like, people are putting selling pressure in it, but the Fed's coming back to buy it. And that's what they've been doing. It's been very effective. I can't lie. It's been working over the past since March, since this time, and we've had over almost 100% returns on your money if you bought down at the bottom. But that is the issue that is going on here, and that is what caused this this drop in price overnight today. But the Fed, as you can see, they're not. It's not perfect. It's not like they're perfectly timing this, but they're able to get back in and purchase more bonds. And it's a system that has worked for the past few months now. So if you're worried about your stocks, I would not, because the interest rates are going to come right back down, and the yields are going to come back down, and the Fed is going to step in with more stimulus and be able to push this market up even more and push the bond prices down, try to hold them down as long as they can. Will this game go on forever? Of course not, but as of today and as of right now, that's what has been working. But I want to take a look at a couple of companies that actually had an absolute bloodbath today. Tesla, great example. This thing went all the way down to uh, what is it, 619. Let's look at the daily chart on this, because it was so bad. This got killed today, and Tesla. I don't think Tesla has been having issues ever since they announced that they had this little Bitcoin. Elon Musk came out and said, "Okay, we're buying Bitcoin." Ever since that happened, Tesla has not looked good. For me personally, I like Tesla, but I think it's a little overpriced, in my opinion. Even though I think this chart is probably going to keep on going, I think this is a nice little falling knife action. You might have a couple of days where it pushes back up, but we're going to have to wait and see if this thing continues to drop some more. It has some good technical levels. Let me draw some technical levels for y'all. It has some interesting technical levels right here. It has some lower ones right here, and it also has this one right here. So it has some room to run, drop down. I mean, so we'll see what happens with Tesla, but it's very interesting to see what's been going on in this market. So your boy Fed Powell is now stepping in. As you can see, the market has completely turned. They had a meeting earlier today with Congress, excuse me, with the Senate, and he was able to talk to them about the stimulus, how things are going, and they're going to continue to print money. So what I recommend, with how the scope of this market is looking, I think this is a great buying opportunity. The way things are being dropped, as soon as things drop, buyers are able to bid the prices back up. Things are able to push the price back up, and I think if you're nervous about the market right now, I wouldn't be. If you're in the market for the long term, I definitely recommend just buying and holding, and letting it do its thing. If you haven't been in the market yet, I definitely think this is a buying opportunity. Get your averages down a little bit. If you're in Tesla, I would recommend just buying some more shares. Um, Tesla's like the big one that everybody's looking at. So if you're in Tesla, just buy some more shares. Get in here, get in there, get in there. If you bought at the top, just buy some more. And I think over the next few weeks, it's going to be all right. Um, Definitely in the short run. But we're going to take a look at the individual sectors real quick, and then we're going to wrap up this video, just to show you exactly where the strength is in this market right now. So right now, the strength of this market is in the oil, the basic materials, the industrials. Those are the sectors that are doing very well. Let me change to my my other screener real quick so I can show you exactly what I'm talking about. So the hard assets, the stuff that's physical, the stuff that is basic, and the the basic materials and the simple stuff within the economy, the commodities, the gold, not really gold, but silver, oil, cotton, stuff like that. Those simple materials are doing very well in this economy, and I highly recommend you get into those right about now. That is where you want to be. You want to be in these sectors. As you can see, basic materials, this is the ETF for the basic materials, is doing very well, pushing up uh, the uh, the energy sector is also doing very well. This is where you have a lot of your oil stocks. That's doing very well. Your industrials. This is where you have your metals. That's doing very well. Everything else in this market, the technologies, the consumer discretionaries, they're really sketchy right now. And those are like those fun companies, the flashy companies, the Teslas of the world, the stuff that people really think are super cool and hype. Those are where these companies are, and they're getting killed right now. So where you want to be in the short term is in these basic, simple companies, the easy companies that have a basic fundamentals, basic framework for their business, simple stuff like that. Definitely for the next, I'd say, next couple of weeks, because that's where it's showing a lot of strength. I know for me personally, I'm not giving financial advice on what specific company you should be in, but for me, I'm in TX. This is a industrial company, and is doing very well during this drop. So that's where you want to be. Definitely stay in these companies for maybe about a couple of week or two, and then really start to take some positions on these the little fun companies, the discretionary, the consumers, the technologies. Even the real estate's getting killed, so maybe real estate will be a little better coming next week or so. I would think real estate would be a little better since it's a hard asset, but for some reason it's not been super hot over the past week. It's kind of been selling off with the rest of the market. I guess it's overpriced along with the rest of the market. But that is my look on the market for right now. That's exactly what happened. Interest rates are rising, but the Fed Jerome Powell, is coming to save the day, as they usually do. The Federal Reserve is coming with all their stimulus, and more is on the way. Help is on the way. But that's going to wrap it up. If you had any questions about the market, what happened for you today? Did you sell any stocks? Did you buy any stocks? Did you buy more? Did you really not care what happened overnight today? Let me know down in the comment section below. And that's going to wrap it up. It's been your boy, Blessed Applesauce. Stay blessed. And I'll see you next time in the next video.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed.